Buckle up, folks. The 2024 market reversal is here and it's taking us for a ride. This year we're looking at a wild roller coaster of a market with more twists and turns than a thriller novel. The past year has been a whirlwind, with the S&P 500 shooting up by 26%, the housing market surging, Bitcoin prices doing a neat double, and Tesla rolling out jaw-dropping advancements. As we look ahead, we're anticipating a buffet of events that could stir up the pot. We've got declining interest rates on the horizon, an election year brewing, and a host of potential impacts on stocks, real estate, and cryptocurrency. In the face of all this change, it's important to remember that volatility isn't always a bad thing. It can create opportunities if you know where and when to look. Hold on to your hats, because 2024 is about to shake things up. The stock market is a roller coaster and we're all strapped in. Just like a thrilling roller coaster ride, the stock market's ups and downs can be exhilarating, terrifying, and everything in between. But unlike a rickety amusement park ride, the stock market can be a profitable journey if you know how to navigate it. The first rule of thumb is to think long-term. Regardless of the year's market conditions, history has shown us that a long-term investment strategy is the way to go. Instead of trying to predict the market's twists and turns, consider staying invested for 20 to 30 years. This approach allows your investments to weather the market's inevitable storms and capitalize on its periods of growth. Over the past century, the average annual return for the S&P 500, including dividends, has been around 10%. That's a pretty good return for a long-term hold strategy. Now you might be thinking, well, if I can predict the market's ups and downs, wouldn't that be even more profitable? The truth is, timing the market is a tricky business. Even the most experienced investors have a hard time accurately predicting market movements. Instead of trying to beat the market, consider a strategy known as dollar-cost averaging. This involves regularly investing a fixed amount of money in the market, regardless of the price of individual shares. Over time, this approach can lower the average cost per share of your investments. Finally, let's discuss the elephant in the room: elections. Election years are often accompanied by uncertainty, which can lead to market volatility. However, historical data suggests that election years tend to have positive outcomes for the stock market. In fact, since the Second World War, the stock market has ended higher in 18 out of 20 presidential election years. So, sit tight and enjoy the ride. The stock market roller coaster might be scary, but it can also be profitable. Just remember to keep your eyes on the horizon, hold on tight during the dips, and enjoy the climbs. After all, it's not just about the destination but also the journey. If you thought the stock market was a roller coaster, wait until you see the housing market. The year 2024 is poised to bring about considerable changes in the housing market. Brace yourselves, folks, because we're not just talking about a few decorative touch-ups here and there. This is going to be a full-on renovation of market dynamics. First off, let's talk mortgage rates. There's a significant chance we'll be seeing a drop in 30-year mortgage rates this year. Why, you ask? Well, the Federal Reserve is likely to lower interest rates, and this, in turn, typically translates into lower mortgage rates. So, for those of you who've been patiently waiting on the sidelines, this might be the perfect time to jump into the game and secure that dream home. Now, as the saying goes, when one door closes, another opens. And in this case, the door that's opening might just lead to a surge in home sales. With the anticipation of lower interest rates, we could see a flood of pent-up demand hitting the market. Homeowners who've been hesitant to list their properties might finally take the plunge, leading to an increase in available homes for sale. But remember, not all that glitters is gold. While some areas might experience a boom in home sales, others might face a slump. The housing market, much like the weather, can vary drastically from region to region. Some areas might see price declines due to an oversupply of homes, while others could see price increases due to high demand and limited supply. So, what's the takeaway here? Well, it's the same old wisdom that's been passed down through generations of successful real estate investors. In the housing market, it's all about location, location, location. It's crucial to research and understand the specific dynamics of your target region before making any investment decisions. In the housing market, it's all about location, location, location. Welcome to the Wild West of finance, where Bitcoin and commercial real estate are the new sheriffs in town. In this unpredictable frontier, alternative investments like Bitcoin can add a dash of adventure to your portfolio. This digital gold rush has seen a doubling of Bitcoin prices over the past year. But as any seasoned prospector will tell you, with great reward comes great risk. The future of Bitcoin is as uncertain as a tumbleweed tossed in a desert windstorm. An upcoming decision on a Bitcoin ETF could either send prices soaring like a rocket or plummeting like a stone. It's a high-stakes game of poker, and you've got to know when to hold 'em. Now let's saddle up and ride over to the bustling boomtown of commercial real estate. It's no secret that location is everything, and my own experience in Las Vegas serves as a prime example. Once a glittering jewel in the desert, the city has seen its share of highs and lows. Recent times have brought about a decline in regional value, a stark reminder that even the brightest lights can dim. But remember, every sunset is followed by a dawn. As investors, it's our job to spot those first rays of light breaking over the horizon. When it comes to these alternative investments, it's important to keep a cool head and not get swept up in the frenzy. It's like trying to lasso a wild stallion. Thrilling, yes, but potentially dangerous. That's why it's wise to only dedicate a small portion of your portfolio to these ventures, keeping your financial footing stable, even when the ground beneath you starts to shake. In this lawless landscape, there are no guarantees. The market giveth, and the market taketh away. That's why it's crucial to do your homework, stay informed, and always be ready to adapt your strategy to the ever-changing conditions. In the wild west of finance, it's every investor for themselves. But with the right strategy, you can strike gold. Now that we've navigated the wild world of 2024 finance, it's time to build your investment blueprint. Picture this. You're an architect, and your project is to construct a skyscraper of wealth. To make it sturdy, you need a blueprint, a plan. Just like that, in the realm of finance, you need an investment blueprint. Start with simplicity. Finance might seem complex, but your approach doesn't have to be. Focus on reducing unnecessary expenses. This doesn't mean cutting out all joys of life, it means choosing wisely, prioritizing needs over fleeting wants. Next, invest regularly. Consistency is key here. Let's say you choose to invest a fixed amount every month. This strategy is known as dollar cost averaging. You buy more when prices are low and less when they're high, thereby reducing the impact of market volatility. Hold on to your investments for the long haul, ideally for 20 years or more. Remember, Rome wasn't built in a day, and neither is wealth. Historical data suggests that staying invested for 2 to 3 decades tends to yield profitable returns. Consider buying index funds. They are a great way to diversify your portfolio and reduce risk. You're essentially buying a small piece of the entire market, spreading your eggs across many baskets. Save for potential real estate investment. With declining interest rates and pent-up demand, 2024 could be a golden year for home sales. Having a nest egg ready for real estate opportunities is a smart move. Finally, consider allocating your investments through a trusted platform like Vanguard. It offers a wide range of low-cost mutual funds and ETFs, making it a one-stop shop for many investors. The key is to maintain a long-term perspective. Market fluctuations are part and parcel of investing. Rather than panic, view them as buying opportunities. If you've saved excess funds, they could serve as dry powder on the sidelines, ready to be deployed when the market drops. With this blueprint, you're ready to build your financial future. And remember, in finance as in life, patience is a virtue. So there you have it. The 2024 market reversal is a wild ride, but with the right strategy, you can come out on top. We've navigated the volatile seas of the stock market, emphasizing long-term investment and the power of dollar-cost averaging. We've examined the shifting sands of the housing market, anticipating changes in dynamics and mortgage rates. We've delved into the wild west of finance, considering alternative investments like Bitcoin and commercial real estate. And we've provided a blueprint for your investment journey, advocating for a simple, consistent approach and the importance of staying invested during market fluctuations. Remember, the key to wealth building lies in reducing unnecessary expenses, investing regularly, and maintaining a long-term perspective. This is your year to get rich, to seize the opportunities that the 2024 market reversal presents. Thanks for watching. Don't forget to like this video and subscribe to our channel for more financial insights. Until next time, happy investing.